Hey everybody, this is Jose Blasco. Please confirm that you hear my voice. This is a sound check. We are about to start the session. Thank you very much. Quick message on the chat box would do. We are 10 seconds to go right now. Very good. We just reached the top of the hour. So it's time to begin. Welcome to the session, everybody. Today is July 9, 2020. Ready to do a little bit of trading, isn't it? Today is Thursday. We are going to be doing some longer term trading. This is the day where we love to exploit the power of options trading. So we're going to be looking at directional opportunities, non-directional opportunities, all sort of trades, depending on what the market provides us with. Okay, we'll just adapt to whatever it's available. Before we start, I have a disclaimer to read for you guys. I'm also confirming your hellos and your confirmation that sound is good. So that's fantastic. Thank you so much. Good to see you, Lila. Good to see you, Lilan. Good to see you, Ahmed. Very nice. And again, as I said, I need to read the disclaimer for you, and then we begin. So disclaimers: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive when using our products. Here we go. That's it. The session is officially introduced. So I will go ahead and get rid of the PowerPoint presentation so we can get on our TradeStation platform. Okay. And what I would like to begin the day with is to do a little bit of a review of trades that we have in place for now, trades that we have planned in past sessions, okay, that are in our account, and it would be certainly healthy to look at what's happening with such trades, okay? And as I was getting ready to start the session, by the way, I was noticing delay problem with connecting to the network with the servers of TradeStation in this case. I am not sure why my charts are not really loading easily. Let me do a little test here. I'm just gonna test if I load a new chart, if it's loading or not. Doesn't seem to be loading. What if I change to a different market, such as a currency? Okay, so this is not obviously not the ideal way to start the session with a little bit of a technical problem here. We can always switch to trading view. We may have to do that because the system is not loading opportunities, is not loading charts for me. I do have the opportunities ready here on the scanner. Okay, I did run the scanner a few hours ago before the market opened. So this is the updates of the scanner from earlier in the day. Obviously, for me to be able to plan non-directional trades properly and so on, I need to go ahead and put together those trades using an option chain. Okay, so I may have to use and load an alternative option chain because I'm not sure if I load Option Station Pro, if Option Station Pro will load well as well. It seems I'm having a technical issue here. Okay, so let's check Option Station Pro first. If not, I'll bring an alternative platform to the session, as well as TradingView to do our chart analysis. Okay. Sugma, excuse me, sir, warm regards and apologies in advance. How do I have this trading system if I want to subscribe, and what is the name of the product? It seems I am quite interested in learning. Very good. Wonderful. Thank you very much for your question. And it's very, very simple. You just need to utilize our website. I'll write it for you here, www.tradewithufos.com. Okay, and then you add /join. Okay, and when you get to that section of our website, then you're gonna get to see the different options available, both for your learning as well as the apps, the technology that we use, and so on. Okay, so I'll do it for you here very, very quickly while we're waiting for Option Station Pro to hopefully load. So it's loading. Trade with UFOs join. Here we go. So notice here how you have on the left memberships, in the middle you have the apps, and on the right you have the courses. Okay, so depending on where you are at, in your education. So just pick the tools that you need, and if you need support on, a little bit of, recommendations and so on, you can always send an email to support at tradewithufos.com. Okay, and we will certainly assist you from there to pick the right course or the right apps depending on what you need. Okay. Good. Anyway, okay, so Option Station Pro is not loading. So I'm gonna have to load an alternative platform here. So let's do that. Okay, let's do this. I'm doing this on my other computer screen. I will bring it to the main screen in just a second. So here I got TradingView. Okay, and I'm gonna load my other layout, the one I normally use when we do the short-term trading sessions, isn't it? But we can also use it today. Okay, so not a problem in that sense. Okay, this should be 51, and this should be 55. Here we go. Okay, that's it. Got it. Perfect. So I got TradingView ready on my other computer screen. I just need to input the password in, which is another platform. So it's halfway into being loaded. Normally I got everything ready, isn't it, for when the session starts. Today, right at the beginning, I noticed this slowdown on how data is being loaded. So that's why this is happening to us today, okay? But anyway, this could happen as well. Any day when you trade, you have a technology problem. So what's important is to stay cool, okay? To stay cool, it's very, very key. Okay, so we have here Thinkorswim. This is a different platform. I have TradeStation, which is not loading charts, but still we're going to be able to look at the results when it comes to those different trading opportunities. Okay, and therefore let's begin our session now. I'm going to be jumping back and forth between tools. Okay, it's going to make it a bit more complex than usual, but at least we'll get our trades identified and ready to be executed. Okay, so let's begin. Yep. Yeah, very good. Thank you, sir, for answering my question. And I registered for membership, but it's free, and we'll try the subscription. Very good, wonderful. Thank you so much, Sugma. So let's begin with the non-directional opportunities. Okay, so I'll zoom in the screen. So I selected ND, that stands for non-directional. I also sorted the stocks based on their price, their closing price, and I got the most expensive stocks on the top, the cheapest stocks on the bottom. The reason why I did that is because while options are priced based on multiple factors, one of the key factors, which is the reason why options are known as derivative products, is that options derive their value from the price of the stock. So the higher the price of the stock, not always the case, but you will expect the options to be of a higher value. And because we are selling options when we do non-directional trading, I want to make sure that when I sell options, for the same dollar of risk I want to assume, I want to collect as much premium as possible, isn't it? So obviously, sometimes you may have a stock which is $100 per share that got more premium built in than a stock that may be $150 per share. This could happen, and definitely happens, but it's a good starting point to start with, higher price point stocks that potentially could help for higher quality trades. Okay, so let's begin with UNH. Okay, UNH, and of course I cannot chart it on TradeStation, so I'm gonna have to move to Thinkorswim and load UNH. Okay, and I am aware that the font is gonna look very small here, so I will be zooming in and out for you guys to be able to see this better. Okay, so here is UNH. Okay, and also I need to move into TradingView to check UNH. Okay, check UNH and find out more about when is the earnings date for UNH. Because if the earnings date is too close, then we may have a problem, right? So the earning date for UNH is 15th of July. If I go back to the TradeStation window here and I look at the date, 15th of July happens to be next Wednesday. In other words, for me to do this trade, I can only use February 10 expiration, because if I was to use February 17 expiration, I would be exposing myself to the earnings day, which earnings, okay, normally produce gaps or acceleration in price movement. Therefore, we cannot use the 17th of July. That would be way too risky. It's a non-directional trade. You want the market to remain quiet. Earnings are a reason for markets to pick up speed. So certainly we don't want to use July 17. And July 10 only has 1 day and a half to go. Therefore, we should expect extremely little premium left in July 10. Well, having said that, most of the times those trades would not work well because it's only 1 day and a half to expiration, so it's very little premium. But it's always worth it to check because sometimes, rarely, but sometimes you may get this extra premium and it justifies the trade, and then it's a very low risk trade in the sense that you only need to resist, only need to survive 1 day and a half. Okay, so it's always worth it to check, even though most of the times when we look at such short expiration dates, we get a no. Okay. Ahmed, yes, very good. Thank you very much for reading my thinking there. I didn't notice you type it when it comes to the earnings date, but very well done. Okay, so we're gonna be looking at July 10. Okay, July 10. With TradeStation, normally I would use the simulation tool to do a projection, isn't it? Here, I mean, I can do it the same way. It's a bit more complicated with Thinkorswim, to be honest. It's simpler with TradeStation. So I am inserting an iron condor here below, but notice that by default, it's giving me plus 10% and minus 10%. So I want to change this to 1 standard deviation above. Okay, here. So 1 standard deviation above, and I want to change this to 1 standard deviation below. Okay, so this now looks like what I normally do with TradeStation. Okay, but also notice how Thinkorswim operates differently, and when I do that, I got the same values for everything, given the fact that this particular tool implies that I also need to change the date to the 10, okay, the 10 of July. And if I do that, okay, if I do that, now we are being told, take a look at this. It looks a bit weird to me that 290. Well, actually, maybe okay. Yeah, maybe right. Yeah. So for a minute, I was thinking that it may not be correct, but yes, it is indeed correct. So 319. Let me zoom in. Okay, so after changing the date, okay, and this is the tricky part of Thinkorswim, you cannot forget the date, okay? So it seems that 1 standard deviation of price movement above and below would have that stock ranging from 319 all the way to 261. So being trading at 290 right now, that stock may rally to 320 into tomorrow or drop to 260 into tomorrow. So knowing those values, okay, 320 and 260, the question is how much I get paid if I sell the 320 call. Okay, and notice that really we get paid 12.5 cents. Okay, because there is not even bid. Okay, so in other words, this trade cannot be taken because we do have a rule where the minimum we accept when we sell options is 35 cents. So we're not going to be able to accept the trade on UNH, and therefore we're going to move to the next one, which is Facebook. And same story. Let's first check the earnings date for Facebook. So the earning date for Facebook is a bit further away, isn't it? It's July 29. And that's nice, okay? That is nice because this allows us to do many more things, okay? Now, having said that, let's take a look at the chart, okay? Let's take a look at the chart because when I look at Facebook, okay? Facebook, here we go. Okay, and by the way, this is a desktop that I utilize for intraday trading as well. So please ignore the 4 charts on the left, ignore that. Let's focus exclusively on the 2 charts from the right, which is the daily time frame and the 55-minute time frame. Okay, and more specifically for non-directional trading, I will focus on the 55-minute time frame. Okay, and when I look at that and I turn on AutoUFOs, notice that I do have multiple UFOs here on the screen. Okay. But if I zoom out, okay, and I load plenty of data, notice that the only UFOs I got are green. Okay, I don't have anything red, and the reason why I don't have anything red is easily understood if I show you like the monthly time frame, for example. Notice that Facebook it's kind of making all times high. In other words, there is no sell on field orders above price because that stock is making all times high. While this is a good thing if you are invested directionally on Facebook, it is not a good thing when doing non-directional trading, because when you do non-directional trading, you want to have multiple UFOs above and multiple UFOs below. The minimum is two UFOs above, two UFOs below. So even though we do have Facebook here on the list, it doesn't allow us to do a directional trade. We may look into a credit spread later on. Okay, we may have it here as a credit spread. Let me see. Yes, we have it here as a credit spread. So we could look into that. But as a pure non-directional trade, it doesn't qualify. Then we got IEF, which is an ETF, and therefore I'm going to pass. And then we got FISV, which could be a valid pick, but normally is not super liquid since JP Morgan is right there and is much more liquid. Let me go ahead and try a trade on JP Morgan, see if JP Morgan allow us to do a trade. And if not, then we'll continue working in other type of opportunities. Okay, so JP Morgan, let's first reconfirm the earnings date for JP Morgan, which is July 14. Oh, okay, so that's not gonna work, isn't it? July 14 only allow us to use tomorrow expiration date, and that stock, is a $91 stock, so it's gonna be very, very difficult. Let me double check this very quickly. So JP Morgan. So JPM. So loading JPM, and I'm gonna do the same thing here once I got the data. Okay, here we go. So I'm going to right click to analyze and sell an Iron Condor, and then I'm going to change the price slices to +1 standard deviation and -1 standard deviation, and then change the date to tomorrow. Actually, it was already changed. So why is it not? So today is July 9. So what if I make it July 10? Interestingly enough, it doesn't change the value. Okay. So if I do 11, that means that it would be 100 to 82. So again, I'm just going to do the same thing. Look at how much I get paid for the 100 call, and I get paid less than 1 cent. Okay, so again, 1 day to expiration is very difficult, guys, unless the stock is much pricier and there are other possibilities out there. So let's forget about non-directional trading for now. There are a few more picks here, so we can look into those, but they are lower price points. So I think that it would be good to explore the world of credit spreads. And we got a collection of stocks here. Oh, here we go. It seems that I'm getting data interest station again. So that may make everything easier for us. So we'll see. Let me see if I click on Netflix. Yeah, so things are back to load normally. I guess maybe they were doing some maintenance in some TradeStation server or some node in the network or something like that. But anyway, so Netflix, okay? So what do we have with Netflix? When it comes to Netflix, let's look at earnings date first. So earning dates for Netflix happens to be July 16, so we cannot do it, it's too soon. What else do we have? We have now, okay? So let's look at now. So we're looking at now, the earnings date happens to be July 22nd. That I like it very much because we can use July 17, which happens to be the monthly expiration. Normally monthly expirations almost always imply greater liquidity. And that particular company, ServiceNow, is not super liquid, so it's gonna be a good thing to attempt the trade utilizing that July 17 expiration. Okay, we got the option station pro. It's kind of stuck because earlier there was this problem on TradeStation. So what I'm gonna do, if you don't mind, I'm just gonna move this to the other computer screen, and I'm gonna have a reboot on TradeStation while I work on now using Thinkorswim. That way, the next trade that we plan will be fully planned and executed using TradeStation like we always do. It's gonna be an easier one. Okay, cool. So so now let's go ahead and take a look at now. Okay, so loading now. Okay, waiting for that now. Here we go. Okay, here we go. So again, for now, I want to use July 17. Okay, this is a more liquid option chain. I'm going to right click and analyze and sell an iron condor. And I am going to go ahead and change this to 1 standard deviation above and below, +1, -1. And I'm going to change this to July 17, which is the day of that expiration. Okay, so this is telling us that that stock may range between 460 and 376. Okay, 460 and 376. This is what is likely going to happen. Okay, so you see me multitask a little bit because I am restarting TradeStation as well. So the question is the 460s, how much they pay us? Okay, and here you can see that the 460s are paying us like $1. The 375 are paying us like 75 cents to 250. So wait a minute. I don't have the midpoint here. Okay, yeah, it'd be convenient to have the midpoint. Okay, guys, just bear with me. Sorry for the multitasking today. I am about to be ready again with TradeStation, okay? And hopefully we can do the whole thing with TradeStation as we always do. It's gonna be an easier one for you to follow. Here we go. It's loading now. Almost there. Well, one thing that traders we need to develop is patience, isn't it? So I guess that when these things happen, it definitely tests our patience level. And certainly when these things happen, on top of that, while we're doing a trade, while we're streaming it on YouTube, and of course, as your coach, as your guide, I would love to have an easy time to put trades together, because that way not only it serves as a good trade, but it also for educational or leading purposes, you get to understand everything better. Well, obviously, when we have technology problems like I'm having, or I had, obviously is not helping at all, isn't it? So it does test our patience, and I really appreciate you guys working with me on that. Okay, so loading Option Station Pro now. Okay. Almost there, I guess. Here was our now trade on Thinkorswim with TradeStation. Here is Option Station Pro. Very good. So things are loading right now. Very good. Perfect. Okay. So July 17 for now. So I need to change this to now. Okay, we have it there. And yeah, so all is good. Okay, so let's go ahead and right click to analyze and sell an iron condor. Okay, and we're gonna change this to +1 standard deviation, -1 standard deviation. Okay, and this is giving us values of 445, 391. Okay, so this is what we have now to work with. So let's go ahead and get back into the chart. Okay, let's get back into the chart and draw lines, which I'm gonna make this line dotted. Okay. And by the way, we are looking here to do a credit spread. Okay, so notice there's been multiple changes here. So we started the session doing non-directional, and now we are doing credit spreads. Okay, so with credit spreads, and notice that I started with the one with the up arrow, right? So we only care about the green UFOs, we don't care about the red UFOs, okay? And in this sense, we are going to be relying on 390. That's the key value. 445 is interesting, but we're not going to sell options above that because that would be an iron condor, okay? And which, by the way, as you can see, I inserted an iron condor by mistake, given the fact that I was coming from the prior applications, and sometimes muscle memory does that, right? So I'm changing this now to analyze and sell. Notice I'm using the put side, a vertical spread, and I get the same 390 because I have the same expiration date. Okay, so I knew 390 was right, but certainly not an iron condor. We're doing a credit spread, which is a vertical spread. Okay, so 390. Okay, that's the value I want to have on the chart, which is more or less here. Okay, and once you have identified 390, really what we need to find is a UFO beyond that. And the UFO we have beyond that is all the way there if we use regular session data, which is good because it's giving us 54%. Now the question is, what if we use pre and post market data? What do we get? Okay, what do we get? Well, we get 45%, and that is not acceptable. Okay, for non-directional trades, we take minimum 48%, and that's 45. So in other words, for this trade to work, we will need to sell the 360. Okay, sell the 360, and if I look at the 360 put, the question is how much we get paid. I would expect it's going to be quite little, really. It's 60 cents, midpoint 60 cents. So it's actually okay. So let me load everything and see what's below 360. Yeah, but there is really, really no liquidity. So if I sell this one, I get paid 60, but then I have to pay 112. Okay, so really the liquidity, it's extremely weak. And therefore, given the lack of liquidity, we cannot do this trade. Okay, it would be destructive because the option you buy will cost you more than the option you sell. Okay, and this is because of the lack of liquidity. Okay, so no problem. We're gonna continue, and we are looking at BIIB. So this is Biogen. Okay, so looking at Biogen, chart is loading. Let's check earnings for Biogen. BIIB. Okay, earnings are happening on the 22nd of July. So same thing, we can use 17th of July. Okay, 17th of July, which is the next Friday, would be a valid peak for that particular stock. And also we got good statistics, 52%. So all of these allow us to do it. Okay, so let's put it together. I'm gonna load Biogen, BIIB. Open the 17th of July expiration date. On the put side, right click, okay, and analyze and sell a vertical spread. Okay, and my concern with Biogen is also lack of liquidity. We'll see how it goes. So 258, okay, 258 is where I need to be selling options even before I put lines on the chart. 258 will have me sell the 257.5, which would pay me 205. And then I could buy protection for 115. Okay, so while in theory the midpoint, okay, because I'm looking at the column mid, isn't it? So while in theory the midpoint suggests that selling that and buying that will create a credit, okay, the reality is that the 255 has an okay level of liquidity, okay, but then when you look at the 257.5, it's really, really, really wide. Okay, so again, having this trade work or not will basically depend on where the UFOs are and therefore the strike to be used. Because like if you look at this one, for example, from 155 to 190, liquidity is acceptable. Let's call it acceptable. But certainly if you are looking at the 257.5 from 125 to 285, it's kind of like more double the value. The spread, the beta spread is way too much, way too destructive, isn't it? So in the end, it will depend on which strikes we use. So we know our reference is 258, okay? Our reference is 258. So I'm just gonna draw a line around 258, okay, which is more or less here. And basically we need to find a UFO below that, okay? So we have two UFOs here, but we need one below that. So when was price below that price level? So we had, trading happened here around let's call it October, August. So I'm gonna load data from August 19. Okay, so first date August 19. Okay, so we get to see all the UFOs available. Wait a minute, I did that on a daily time frame. I meant to do it on the 55-minute time frame. So August 19, 55-minute time frame. Okay, here we go. So what do we have? Okay, wow, the UFOs are so far away, so far away. I'm gonna get no premium for that. It's too far. What about pre and post market? Okay, regular session is giving me 54% UFO performance stats. If I load pre and post market, it's giving me 46%. That is not acceptable. So guess what? We have a no with Biogen. Okay, we cannot do Biogen. So we're gonna move into Alibaba, which is the next one in the list. And same story. Let's check earnings for Alibaba, which are happening on 13th of August. Okay, so here we got plenty of time, okay, for us to decide expiration dates. Okay, so here's Alibaba. We got 50% in pre-post market. Looking at regular session, we have 47%. Well, we still have pending data, so let's wait until everything is loaded. PD stands for pending data. How are you guys doing, by the way? I've been non-stop talking and talking since we started with some technical problems, and you guys have been very quiet, which I understand. But you guys give me a little bit of feedback, and if everything is good, just say good, okay, and I'll be happy. So 50%, we're gonna have to use pre and post market for that particular trade, okay, with Alibaba. And let's go ahead and input this in Option Station Pro. So Alibaba. Okay, I want to start with July 17 as well. Okay, because it's gonna be more liquid. Same thing with Alibaba is okay when it comes to liquidity, but it's not amazing. Okay, it's not like the most liquid stock in the world. So we need to be careful there. Okay, with the dates that we pick, and normally weekly expiration dates have less liquidity compared to monthly expiration dates. So when looking at Alibaba and looking at plus and minus 1 standard deviation, okay, the minus one standard deviation below points at 238 as the bottom part. Okay, so let's go ahead and draw a line where 238 is. Okay, how can that be possible? The current price. This is quite weird. Let me see the last date. Okay, today. Okay, now it makes sense. Good. So 238. Here we go. 238 is here. Okay, 238 is here. So we need to use at least 2 UFOs. So this is UFO number 1. So this is UFO number 2. So if I go ahead and I sell options below 231, okay, based on probabilities and UFOs, the trade should end up profitable, right? So let's take a look at how much we get paid if we were to sell the 230 puts. Okay, we get paid 50 cents. Okay, 50 cents is more than 35, and therefore this trade is to be accepted. Initially, we need to look at more parameters, but initially it looks okay for us to accept. Okay, and then the below strikes are 227.5, 235, 225. Okay. I'm just looking at everything here. Yeah, liquidity is okay on those options. So okay, let's do this. Let's try 230 and below and see what we end up with. Okay, so I am buying the 227.5 and selling the 230. Here we go. So notice that the trade is made of puts. Notice that the expiration date for both puts is July 17, and we are selling the 230 strike and buying protection below at 227.5. Okay, so basically this is a bull put spread made of selling the 230 put on Alibaba and buying the 227.5 put on Alibaba. Okay, this is how the trade is made. And the question is that valid? Is not valid? Are we gonna take it? Are we not gonna take it? Okay. And no, we're not gonna take it. Okay, we only get paid 8 cents. Okay, for this trade, and that's if you were to get the midpoint. And the difference between strikes is $2.5. Okay, so the rule we have is that for us to accept a trade, okay, you want to calculate the difference between strikes, which is $2.5, and then that value you multiply times 15%. Okay, 0.15, and that tells you 37.5 cents is the minimum that we need to get paid to accept this trade from a risk and reward point of view. In this case, we only get paid 8 cents, which is less than 37, and therefore this trade is to be discarded. Okay, now for sure we can use other expressions. Okay, so when looking deeper, July 17 got 53% volatility. July 24 got 49. What was the date again? I said 13th of August is the earnings for Alibaba. So really, we can go all the way to 21st of August. Okay, but as you can see, the other expiration dates got a little less volatility built in. Okay, and I'm not sure how liquidity is going to look like. Yeah, it still doesn't, like for example, if we were to do the 230 combined with the 27.5, and you get paid 132 and you pay 104, the difference is still less than 37.5 cents. Okay, so no matter what, it seems that we're not going to be able to do the trade on Alibaba. So we will move to the next one, which is Facebook. So let's take a look at Facebook. So pending data, the data is loading now. I'll take a sip if you don't mind, guys. Here we go. So 48.99 for 99 is what we get with pre-post market. Regular session is giving us 50.55. Okay, now Facebook, when are the earnings going to happen? They will happen on July 29. Okay, so we can use multiple expiration dates. Okay, and it seems that we're gonna start with the 17th of July as well. Again, this is the most convenient one since it's the next one, and also it's supposed to be the most liquid one, even though Facebook is very liquid. So with Facebook, I will have no problem initially looking at other expiration dates. So let's go ahead and right click to analyze the sell and vertical spread on Facebook. We got our plus and minus 1 standard deviation. So using July 17, it seems that price could drop all the way to 225. So let's go ahead and draw a line at 225 and see what we got below that. Okay, so this is more or less 225. We got 1 and 2 UFOs. Okay, so if we were to go for the next one, then it would be this one here. Okay, so 207, that would be the strikes for us to sell. This if you use regular session with 49% probabilities. If you were to use pre and post market, well, basically we got the same thing. The only difference is that now I need to move my line a little lower. Okay, we got 48.99, which is more than 48. So in both cases, it's good. So we are talking about 206. Okay, 206. That's the strike that we would be utilizing for this trade. And there is no 206. There is 205. Okay. And you know we're not going to accept it because if I do the 205, I get paid 35. 34, then I need to buy 25, so I only get 10 cents as a difference, and it's $5 of risk. So yeah, it will not work using July 17. Okay, but what if we do July 24? 98.84, still not looking too good, really. Still not looking too good. Let me go ahead and change this to July 24, This is bringing it down to 200 now. Remember, our line was located at 206. Okay, so maybe I can go a bit further out. 31st of July. What was the earnings date we said? 29. Okay, so I cannot do 31st of July. Maximum I can do is 24th of July. Okay, so 24th of July is bringing it down to 220, and again below 220 we are now pointing at these 206. Okay, so let's go ahead and relook at this one more time using July 24. If I point at the 207.5, okay, let me see what's below that. So 207.5, that would pay me $1. Yeah, it's gonna be tough. Yeah, when you look at the difference between strikes, it doesn't work, guys. Okay, so I just want to save a little bit of time for the session so we find a trade. You see Facebook earnings on the 7/17. That's quite weird because on TradingView it shows differently. Yeah, I mean we have seen, and this is important that we double check those informations. Okay, we have seen since the beginning of COVID lots of crazy reports when it comes to earning dates. Okay, I'm not talking about crazy earnings reports. I'm talking about crazy differences from one website to another when it comes to earning dates. Okay, and that's critical because it seems that companies, given the craziness in the world and people cannot work normally, people cannot work from the office in many places, so they've been just changing dates for earning reports, and not everywhere is being updated. So not sure if TradingView is right or wrong, or your source of information, Ahmed, is right or wrong. The fact is that it would be good to double check 2 or 3 sources of data to make sure that's the case. Okay. Yeah, Ahmed, selling the 225 put would not be a good idea because it would be within the statistical range. To be safer in those non-directional trades, you want to sell options beyond the statistical range. And of course, that makes it tougher to find a good opportunity. You have to go through more charts and discard trades more often until finally you find the trade you're looking for. Okay. So it takes a bit more work, but then it pays more, right? So that's the way to approach it. So Roku, what do we have with Roku? Okay, Roku. So earnings for Roku are happening on August. Okay, so we can use multiple expiration dates. Roku is loading here, so let's wait 1 sec. Okay, it should be up in a minute. So 49 point something is good. So let's go ahead and load Roku. And let's go ahead and use July 17 again. Let's begin with July 17. Okay, so July 17, and right click and analyze and sell a vertical spread. And we're going to change this to plus 1 standard deviation minus 1 standard deviation. And we can see 126 is the value we're looking for. So let's go back to the chart and find 126, which is more or less here. Okay, so this is 126. In other words, if we were to use pre and post market data, which provides 49%, the first UFO beyond that would be that UFO located at 120. And therefore we have 1, 2, and 3 UFOs to protect ourselves. If we were to use regular data, which provides probabilities of pending data, we need to wait 1 sec. Well, it doesn't matter, to be honest, because the UFO that is beyond 126 is still the same UFO here at 120, no matter the probability, okay? Which is 51%, by the way, is better. So 120 is the strike that we need to use, and therefore, let's look at how much we get paid if we sell the 120 put on Roku. So the 120 pays us 62, okay, 62, and 62 is valid because it's more than 35 cents, which is our minimum. Okay, so let's go ahead and adjust this to 120. Okay, so sell the 120 and buy the 119. I'm going to start with that one. Okay, sell the 120, buy the 119. This is the trade that we're doing. So notice that we are using puts. Okay, notice that we are using July 17, and notice that we are selling the 120, buying the 119. Okay, that produces a midpoint of 6 cents. That is not good. Okay, why is not good? Because again, when assessing our risk, okay, we are looking at the difference between strikes, which 120 minus 19 is 1. And when you take that number and you multiply it times 15, that means that you will want to be paid 15 cents. But this trade is only paying you 8 cents. Okay, so is it because of lack of liquidity? What's the reason? We don't know. So let's try what happens if I do the 118. I get 13 cents. Okay, it's not even double 8. Double of 8 will be 16. So there is a little bit of problem there. So what about the 117? Yeah, it's 20. So yeah, so this is not gonna work with that particular date. Okay, with this date is not gonna work. So what if instead we use July 24? If we use July 24, the bottom part of the range is 121. Okay, this is still okay, and therefore I can use the same setup I had before, 120, 119. I could use that. Okay, now notice this is paying 14 cents. Okay, 14 cents, which is almost, okay, it's almost 15 cents, but it's not 15 cents, it's 14. Okay, so it doesn't work. So what if I do the 18? Okay, I'm not getting 30 cents. Okay, what if I do 117? Do I get 45 cents? No, I get 36. So this expiration date is not working well either. Okay, so what if I use the next one? The next one is 31 of July, and I could do that. Okay, I could do that. The reason why I could do that is because remember, the earning date is August 5. Okay, so I could give myself a little bit more time without surpassing August 5. July 31st is not surpassing August 5. Now, this implies that based on probabilities, that stock may drop to 118. So I'm going to go back to the chart, look for the 118, which is more or less here, and therefore the UFO I should be using for this trade is that one here, which is located around 116. Okay, so let's do this trade using 116 and 115. So how much I get paid if I do that? Okay, and notice I get paid 10 cents. Again, the difference between strikes is 1. We want 15% of 1, which is 15 cents, but we only get paid 10 cents. So it is not working well. It seems that maybe there is a little bit of a liquidity problem when we get to July 31st. Okay, let's take a look. 115. Okay, what if I do 115, 114? If I do 115, 114, let's see if this is gonna work. So I'm gonna do 114 and 115, and that is gonna work because 115, 114 is $1. 15% of 1 is 15, and this would pay you 16 cents. So my friends, this is a valid opportunity for us to execute right now. Okay, good. We got one. So let's do it. Let me write it down on the chart so it's well understood by everybody. Okay, I will also put it here, Roku. Okay, so then we can follow up on it. By the way, I never got to review the trades, but it's okay. I guess we'll do it another day since I got this problem with TradeStation at the beginning with the download. But anyway, so what we're doing is we know that stock has earnings happening on August 5, right? I believe that was the data. August 5, correct. Okay. So in other words, these allow us to use an expiration date, which in this case we have selected July 31st, 2020. That's our expiration date. Okay. With this in mind, we decided to go ahead and do a spread. Okay. And the spread that we did is made of selling the 115 put and buying the 114 put right below using that July 31st expiration date. So basically, it doesn't matter where Roku is, as long as Roku is not below 115, this trade will be profitable on July 31st. Okay. So my friends, that's the trade, and therefore I'm just gonna place an order here. Let's talk about risk, by the way. What's the risk of the trade? Well, the risk of the trade is the distance between strikes minus the premium collected. Okay, so if the distance between strikes is 1 and the premium collected is 15, so the risk is 85 cents per share. Every options contract is made of 100, so you got $85 of risk per contract. If you sell 10, you have $850 of risk. If you sell 1, you have $85 of risk. Okay, so this is the spread we just found, and you can go ahead now and trade it. Okay, make it a day order. Okay, and using the mid price 15, that should be the minimum. Okay, I'm just gonna place an order. Okay, and get this yes or no, yes, and now the order is in the system, and I may or I may not get filled because of course I'm shooting for the midpoint. Okay, and the midpoint is it's quite an aggressive thing. Actually, the midpoint now is showing 20 cents, so you may get filled. Okay, if any of you is executing the trade and you get filled, please let me know. I would love to know that because again, depending on the brokers and how the order is routed, you may not get filled. Again, it's a difficult one because we are being quite demanding with a premium to be collected here. Okay, but the possibility is there. Doing the 115, 114, we could get that particular level of premium. Okay, good. So what I'm going to do here is I am going to pretend that I got filled at 15. So in case I don't, we can always, in the future sessions, we can always go back and review what the P&L of the trade would be. Have I got filled? Okay, because right now, the P&L of the trade here shows as -4, which is because of the spread. But as time passes, theta kicks in, okay? And as theta kicks in, this trade will be improving and we'll be able to review this together. Good, everybody. So we surpassed the ending time of the session since almost 10 minutes ago. We were supposed to end at 45. Of course, I had some technology issues, so not an issue for me to stay a bit longer, not a problem at all. But certainly, with the amount of time left, probably I would not have time to go over a trade properly. So, what about I ask you guys? Do you guys have any question out there? Is there anything that you would like to ask? And I'll be delighted to give you an answer, and then we'll call it a day. Any question? How is it going? And if you have no question, guys, I love to know a bit more about where you are at in your trading. How is it going? You know, everything going well? Which areas do you need more support? Is it in trading techniques? Is it options? Is it futures? Is it forex? Is it trading psychology? What is it that you feel that you need more reinforcement on? Okay, I would love to know that. And if all is good, just type all is good. That will make me very happy as well. But certainly looking forward to get some of your feedback, guys. Every time in the sessions we are, you know, all of us, right? So earlier today you had Pedro talking about order flow. Yesterday you had Bert. So, you know, all of us, when we are running the sessions for you guys, you know, we have always the best intention in the world, of course. At the same time, we don't know what we don't know. So maybe you're struggling with a specific aspect of trading, which we are not addressing enough. So it'd be good that you share the feedback with us, okay? Which, by the way, and this is my last comment for today, I also understand that sometimes it's a bit personal. So if you don't want to share it publicly here in the chat box, but you do have an area where you struggle a bit and you need support, send us an email, guys, okay? support@tradewithufos.com. Let me write it on the screen, okay? So you guys have it. support@tradewithufos.com, okay? Go ahead and send us an email, and we'll be delighted to get back to you You know what? I just made a mistake here. I forgot the E. tradewithufos.com. We'll be delighted to get back to you, as I was saying, with either an answer, maybe it's a simple answer, and maybe we can conduct a very special session for you only on the Sundays when we do sharpening. Okay, not a problem at all. So be in touch, guys. Share where you're at, and we'll see you soon. Okay. For Mon, we do have that technology, but that technology is not in the TradeStation App Store as of yet. But we do have that technology developed since many years ago, to be precise, since 2009. So we do have that technology. It's a matter of getting user guides, getting the App Store ready, getting workspaces ready, getting training materials, and so on as well, to not to simply release the scanner and that's it. We need to also support you on how to use it and so on. So, but to answer your question, yes, we do have that technology and many more things actually that we'll be releasing when the times comes. Okay, wonderful. Love to see that you guys are enjoying the use of technology. Okay, that's the way to trade, guys. Okay, that's the way to trade. It's all about technology and computers since years ago. So surrounding yourself by the right tools is the key. Okay. Very good, everybody. You guys take care. See you soon. It's been a pleasure to be here in the channel with you guys. Talk soon. Bye bye. Keep up the good work. Okay, and email if you need anything. Bye bye.